Welcome to our latest charity webinar. Today we're going to focus on the impact of the coronavirus pandemic on charities, specifically on the use of the going concern assumption when preparing your year-end accounts. If you're planning your year-end audit or independent examination, then this is a useful short presentation to help you consider what you should prepare for your auditors or examiners in relation to going concern and why this is important. I've been joined by two colleagues today, Hammond and Coral Curtis, who spend most of their time focusing on the not-for-profit sector. We will start with a short recap on the financial implications of COVID-19 on the economy and the consequences for the charity sector. Lucy will then explain the going concern assumption and how this might be more difficult for charities to confirm in the current situation, and the potential impact that might have on the audit report and your financial statements. Finally, Coral will give you some tips about cash flow forecasts that you should be preparing in order to provide evidence to support the going concern assumption. If we look back, it now feels a long time ago when we first started to hear the name coronavirus or COVID-19 in the news. It was at the end of 2019 that China alerted the World Health Organization of several cases of the virus which started life in Wuhan. At this point, the world looked on as we were concerned that the Chinese New Year celebrations would be restricted by advice not to travel within China itself. Little did we know. We were soon seeing the effects of the virus in the UK, with cases increasing rapidly from March 2020, resulting in Boris Johnson on the 23rd of March 2020 announcing measures to lock down the UK and to introduce social distancing measures. The charity sector is currently in crisis. Not only are charities seeing their income fall, but a recent Charities Aid Foundation survey found that 3 in 10 charities are also experiencing increased demand during this time. We have seen charities adapting very quickly to continue to be able to look after their beneficiaries and to adopt new technologies. They are rapidly adapting to a new normal, whilst working in an environment in which there are still so many unknowns, including whether there will be a second wave. Reduced income streams are being experienced from a variety of sources. The impact of the fall of the stock market is likely to see future legacy incomes reduce and investment returns are expected to be significantly lower. So many fundraising events have been cancelled, which will result in reductions in voluntary income. And with the likelihood of the UK moving into recession, donations are always more difficult to obtain. The lockdown has required any charities with retail operations to close these over 3 months. And although these can now start reopening, this will be a tough process with low footfall expected initially. In some cases, charities may also be experiencing increasing costs. We've listed just a few examples where charities could see rising costs, from the need to restructure and close operations, including redundancy costs, to bad debt and the associated costs with addressing social distancing measures. Your charity may be seeing all or just some of these financial implications of the pandemic, and it's very important for you to understand how this translates into expected future cash flows and therefore the ability of your charity to meet its liabilities as they fall due. As Lucy will explain next, it is the trustee's responsibility to assess the going concern assumption for your charity.
Thank you, Sarah. All of the circumstances that Sarah has been through could have an impact on the future cash flows of the charity and therefore impact on the going concern assumption used in the financial statements. I thought it would be a useful reminder at this stage to go over the trustees' responsibilities around going concern as set out in the SORP. Trustees must make their own assessment of their charity's ability to continue as a going concern, to assure themselves of the validity of the assumption when preparing the accounts. In order to make this assessment, the trustees should take into account all available information about the future for at least 12 months from the date that the accounts are to be approved and signed. They can, of course, look further ahead than this. Many charities, for example, prepare 5-year budgets and cash flow projections. These responsibilities on going concern are applicable whether your charity requires an independent examination or an audit. But what is the effect on the audit? It is the auditor's responsibility to obtain sufficient appropriate audit evidence about the appropriateness of management's use of the going concern assumption in the preparation of the financial statements and to conclude whether there is a material uncertainty about the charity's ability to continue as a going concern, the outcome of which may result in modifications or additional disclosures to our audit report. Providing sufficient appropriate audit evidence to support the trustees' decision to prepare the account on the going concern basis, especially while the coronavirus pandemic is resulting in such an uncertain future, may be tricky. Charities may find that as life returns to a new normal, income streams will change, but without a crystal ball, these will be very difficult for trustees to predict. Therefore, forecasts and budgets should be based on sound assumptions, supported where possible. For example, for future grant income, this may be supported by agreements already signed. Trustees could provide evidence of stress testing and how the charity could adapt or change their cost structure depending on changing income streams. Depending on the evidence provided, additional disclosures can be included within our report, but the auditor is still issuing an unmodified opinion in respect of these matters. For example, the auditor does not modify their opinion, but may include, under a separate heading entitled Material Uncertainty Relating to Going Concern, comments specifically about the charity's going concern assumption. This will draw the reader to a note in the financial statements which state the events and conditions which indicate that a material uncertainty exists, but that the auditor's opinion is not modified in respect of this matter. For example, COVID-19 may have led to significant reductions in the number of fundraising events a charity can hold over the next 12 months. And whilst the trustees have provided sufficient audit evidence, uncertainty remains over when the fundraising events can resume, and therefore the timing of this income is uncertain. Alternatively, the auditor may issue an audit opinion which has been modified. This arises under two circumstances. The first being that the auditor has not been able to obtain sufficient appropriate audit evidence, that the auditor has concluded that the financial statements are not free from material misstatement. If we haven't been able to obtain sufficient appropriate audit evidence, depending on the circumstances, the audit report will either be qualified on this basis or have a disclaimer of opinion. This may arise if the trustees have not prepared forecasts to demonstrate that the charity is a going concern, and yet they have prepared the accounts on a going concern basis. COVID-19 has impacted the ability of trustees to meet, and whilst many have embraced virtual meetings and working remotely, this may not be the case for every charity. If we have obtained sufficient appropriate audit evidence, but consider that the financial statements are not free from material misstatements, the audit report will either be qualified or have an adverse opinion. Last month, the Charity Commission issued some specific guidance for examiners during the pandemic. Having reviewed the information and conclusions made by the trustees in respect of going concern, examiners need to consider the information available to them in relation to the charity's specific circumstances, together with known information such as assistance provided by the government, such as a job retention scheme, as these may have an impact on the assessment of going concern. It may be that the examiner needs to include a comment within their report due to limitations on evidence available, or about the uncertainties surrounding the charity's ability to continue as a going concern. The Commission are expecting that it is likely that examiners will need to be including a comment as a matter necessary for the proper understanding of the account, given the levels of current uncertainty that currently exist. And now I'll hand over to Coral, who will go through the detail of your responsibilities and the information which you should be providing to your auditor or independent examiner.
Thank you, Lucy. So Lucy's explained the impact that COVID-19 could have on the audit or independent examiner's report on the accounts. I'm now going to talk through the going concern disclosures that the trustees themselves need to make in their annual report and in the charity accounting policies. Firstly, the trustees are required to explain if there are any material financial uncertainties related to events or conditions that cast significant doubt on the charity's ability to continue as a going concern. As we've already seen, the COVID-19 pandemic and the UK government response is having a significant impact on charities across a number of different areas, so this will need to be addressed in your report. You will also need to consider the financial sustainability of the charity if there has been significant impact on the normal income streams of the charity and that the cost reductions do not fully mitigate this. So these impacts might need to be discussed in the current year review, if your year end is, for example, March or April 2020 or later, but for all charities, they will need to be included within the financial review to explain why the trustees have prepared the accounts on the going concern basis. As part of this, the trustees should also consider whether they need to update their reserves policy. Now, most reserves policies refer to funds held as reserves as being available to cover a number of months' worth of expenditure in the event of a shortfall of income. As a shortfall of income is the position that many charities will now be finding themselves in, it will be important to review this again, how much expenditure the reserves held will actually be able to cover, and also to note any short-term changes to the policy. So this may include, for example, releasing funds previously designated for future capital expenditure and instead including them within your free reserves. I would expect that whilst previously many trustees have had a policy to build up the charity reserves, there will be many cases where they will now be looking to draw down on those reserves over the coming year or two. This change, albeit a hopefully temporary one, should be agreed by the trustees and explained in the report. And it's not just the current year financial performance or the potential impact on going concern that needs to be referred to, though. Where post-balance sheet events have a significant impact on the accounts, they should be discussed in the trustees' report. There will be very few charities who have not been impacted by COVID-19, given the rapidly changing nature of the measures put in place. So we will want to see comments on how the latest developments impact on your charity. Even if there's no expected impact on going concern due to having secure funding streams, we would still expect to see a reference to the closure of office premises, the furloughing of staff, for example. And then going forwards, this is likely to also include comments on the measures being put in place to safely reopen premises and provide services. Whether there are any restrictions on your capacity to deliver to charitable beneficiaries, and also what is the potential impact on funding, costs and asset values. Your charity accounting policy should already refer to the accounts being prepared on a going concern basis. But given this increased uncertainty at the present time, it will be necessary to give more of an explanation as to why this is appropriate. And this may include referring to the detail given in the trustees' report. So on the next slides, I'm going to show you a few examples of going concern disclosures included within the board report and in the accounting policies which cover these points. Here are a couple of examples of the kind of disclosures we would expect to see in a trustees' report where the year end was before the pandemic was declared, but where the UK government introduced a lockdown prior to the accounts being signed. So whilst there was no impact on the financial results for the year, it is necessary for the trustees' report to refer to the post-balance sheet event of required closures, which is what has been shown in both of these. You can also see that they consider the impact of expected changes in income and expenditure on the charity, along with the availability of reserves and other funds in order to reach a conclusion on going concern. This slide shows the more detailed disclosure expected for a year end which falls after the various measures were introduced. We can see here that it has impacted the charity in a number of different ways. So the first paragraph refers to the impact on the shops, and then subsequent comments on the fundraising income streams and the provision of charitable services. And then finally, we've also got the conclusion on the going concern basis. Your charity accounting policy should already refer to the accounts being prepared on a going concern basis, but given the increased uncertainty at the present time, it will be necessary to give more of an explanation as to why this is appropriate, and you can see here that this refers to the details given in the Board of Trustees report. The first example in green is for a larger charity where the impact is greater, and the second blue example is for a smaller charity below the audit threshold, demonstrating it can continue to meet its liabilities as they fall due for payment. We have talked about the trustees having prepared cash flow forecasts, revisions, and encouraged you to refer to these in your board report and accounting policy statements. But what do you really need to do to prepare for your own peace of mind and to demonstrate to your auditors that you'll continue to be a going concern? To be a going concern, the charity must be able to continue to operate for at least 12 months from the date of signing. So really, your auditors will want to look at your updated forecasts covering not only the first year after your balance sheet date, but also the following year as well, to see that your budget has been revised to take account of the various ways that COVID-19 has impacted on your charity. We'll be looking to understand that your assumptions have been clearly set out, and given the frequently changing advice on social distancing, face coverings, and the publishing of more detailed guidance by the government and its advisors on an ever-changing basis, it's important to clearly note what assumptions you are using. That way, if the rules or the guidance changes, so can your forecasts. This might include points such as the dates of phased return to opening up your offices and other premises, such as shops. It might include details of the timing of deferred loan repayments or lease payments, or when you expect to be able to bring back your fundraising staff from furlough. When do you expect to be able to hold small scale and then hopefully larger fundraising events again? You also need to factor in the key risks in the assumptions in your budget, particularly where income and expenditure may be out of your control. And this would obviously be particular to your charity, so it needs to be sort of carefully discussed with your finance, fundraising and charitable services teams. We would then be looking for your budgets to be stress tested for different outcomes in order to understand what financial headroom you have available. So it's all very well if your initial cash flow forecasts show that you'll still have cash in the bank at the end of 24 months, but what if some of your assumptions are wrong, or income is delayed in being received, or you have to incur additional expenditure in the early months? How can your budget adapt to this? So that's where we'd be looking for the finance team to have done some stress testing, and then also the auditors will do some as well. You need to consider the accounting treatment of any government support the charity has received. So this might relate to the job retention scheme, the loan schemes, or grants that have been received by the charity. And you should speak to your accountant or auditor if you're unsure on how these should be shown in your forecast and in your statutory account presentation. Many charities have seen an increase in demand for services due to COVID-19, as mentioned by Sarah, and this must also be factored into your forecasts. Again, you'll need to make assumptions as to whether this is a short-term need or whether this is expected to continue into the future. I mentioned that it will be important to consider the potential timing of revised payments plans and fundraising events, but you should also think about other areas that will need to be phased in your cash flow forecasts. For example, will the charity be needing to buy any new equipment in order to safely reopen, or investing in further training? What's the expected timing of these? Did you already have in your budget training plans and investment purchase of new fixed assets, or will you be looking to delay those? So it's important to consider the phasing of these rather than just that they will be happening at some point during the budget. And finally, I'm sure that you've already been working on updating your budgets and cash flow forecasts, but it's important to ensure that these cover a sufficient period for your auditors and that they clearly demonstrate how the above points have been incorporated. We would request that budgets and forecasts are provided to your audit team at the start of the audit to give them sufficient time for review, discussion, and performing their own stress testing. However, we appreciate that in these uncertain and changing environments, there are many late updates from the government advice, and so your changes to assumptions may need to be incorporated as part of the forecast. And your audit team would obviously look to work with you when these changes need to be made. I'll now hand back to Sarah to conclude on our webinar.
Thanks for listening. I hope you found this short webinar useful, and there's some ideas there to help you make your audit or independent examination smoother this year, or as smooth as it can be. You'll see on this slide that our contact details are included. So please, if you do have any questions, please feel free to send us an email and we'll respond as soon as we can. Thank you.